Hello, chart watchers, and welcome to Market Watchers Live with Erin Swinlin and Tom Bowley. I'm your host, Tom Bowley. Today's show is being recorded, so you should be able to play back any or all of Market Watchers Live at your leisure. If you're unable to attend the show live, you can now go to www.stockcharts.com/webinars. Follow the link to Market Watchers Live and play back the show. Each show will be archived until the next show begins, so you'll typically have a couple of days to go back and review it. During today's show, please feel free to submit your ticker symbol requests, questions, and comments using the chat window next to the video player. Later in today's show, Erin will provide me some stock symbols from your questions, and I'll use those requests in the 10 and 10 segment at 12:50 Eastern Standard Time, where I'll attempt to annotate 10 stocks in 10 minutes. Market Watchers Live airs on Mondays, Wednesdays, and Fridays from noon to 1:30 p.m. Eastern Standard Time. If you'd like to be part of the show, you can reach us via our chat room or Twitter. Our Twitter handle is at Market Watchers Live. That's at MKT Watchers Live. We also, if you look in the lower right-hand part of your screen, you'll see a How'd We Do area. You can now fill out a survey question, a response, and let us know what you thought of the show. We always love to hear from you, and it does help to shape future shows. So please partake in that if you can as you exit today. For those of you joining us for the first time today, welcome to the show. We are certainly glad to have you. And for our regulars, welcome back. Well, let's see, Erin, we got a lot going on today. So let me just let everybody know first that Erin will be describing her PMO, talk a little bit about DecisionPoint. For those of you maybe that have a lot of questions, hear us, talking on here about the different charts and our different indicators that we use. Erin follows the PMO very closely, so she's going to give you a pretty lengthy segment today describing DecisionPoint and how she uses the PMO and so forth. So you want to stick around, make sure you catch all of that. And if you have questions, feel free to type those in the questions box in that little chat area. And I'll be looking at that while Erin is discussing the PMO. And if there are some questions that I can chime in and ask her while she's going through it, I will do so. So please, be part of the show. Send in your questions. And I also want to mention that Martin Pring, one of the most prominent names in the technical analysis world and a great friend of ours, will be joining our show on Wednesday. I don't know if you've listened to Martin before, but I'll tell you, it will be a treat. Martin has a little different approach. He takes a really big picture view. Those of you with long-term horizons, I think, will really enjoy Martin's presentation. I actually subbed for Martin in his briefing show that he does once a month. Greg Schnell was on vacation, and Martin's work and that webinar was just absolutely outstanding. So definitely mark your calendar for Wednesday and join us and listen to Martin Pring. Bring your questions for Martin. We'll be sure to feed those along to him and try and get answers to all of your questions. And so with all that, Erin, it is Monday. We got another week starting up. This historically is not a good week, and I'm going to talk about that in just a little bit. But how was your weekend?
It was pretty good. Those of you out there know I'm a USC Trojan, so Saturday was a little difficult, but the Rams game was pretty good.
The Rams actually are looking pretty good.
Yeah, I'm pretty impressed considering how bad we were last year. But not too bad. That definitely helped a little bit with my morning after the Notre Dame spanking that we took. It was so ugly, and unfortunately, being alumni, I had to watch the whole thing.
Of course,
I can't leave a game early. I'm just not like that. That's not the kind of fan I am. So
you can always tell a true fan when you get it. You're part of the wrong side of the game, and
you're still there.
And you still show up and mention it the first thing. So I'll give you that. You're definitely a loyal USC fan.
Yes, I am, as many of us are. But anyway, enough of that. I know we have a lot to talk about. Well, geez, especially me today. So I think we should probably get going if that's okay.
Yeah, go ahead and get set up. I know, this is going to be an interesting week because the market has been straight up. You could look at a Dow Jones chart. I mean, it's one hollow candle after another. It's just these little moves to the upside, but it just keeps going one day after another. But this is the worst week of the year historically, going back to 1950 on the S&P 500. So, my blog article today, I was like, here's the bull market meeting these hurricane force seasonal winds that they're going to have to face going into this week. But we'll talk about that some more later. Why don't you go ahead and let everybody know what we're going to get into today.
Yes. All right. So today's agenda. I'll be doing our market updates on the half hour, although I think I'm going to be skipping the second one because I'm going to be in the middle of a riveting discussion about the PMO. So we'll start, though, with our Monday setups because it is Monday, and we do have a few of them. And we want to check on how we did last week. I will be doing the PMO workshop right after that, and I'll be going up probably just up to that 10 and 10 to 1. So we're going to actually do taco as our first 10 and 10 to 1 symbol. So if you want to take a pre-look at that so you can think about it and see if you match up with Tom's annotations later, I just wanted to give you that opportunity for a self-test, I suppose. Earnings Spotlight, Tom's going to go over a couple of interesting symbols that have reported or will be reporting. And then I will be finishing off with the DecisionPoint report. So lots of Erin today. And then we'll finish the mailbag and we'll do the wrap up depending on how many questions we have from my PMO thing and all of that. So that's where we're going to start. And because we are starting right there with market updates, I'm going to move right into the first market update. And let's see, there it is. And away we go. I'm going to first look at our candle glance so we can see how we're shaping up for the day. And interestingly, we did open higher, but as far as the Dow, it's moving sideways. And look at the S&P. It opened higher and has now been sliding all the way down. So that's not what you want to see on the negative, but maybe we are getting a startup for a negative week, as Tom was suggesting. NASDAQ is also down farther than the S&P. So tech's having a very difficult day. We can see small caps continue to slide. I did write about that, I think, sometime last week in the DecisionPoint blog. Wilshire 5000, same, falling. We can see Treasury yields are also falling down to 23.65. UUP gapped up, but is starting to come back down, but it's still reading about 24.39. And we can see commodities are pretty much unchanged at this point. USO started up higher and then took a roller coaster ride down, but is now trying to recapture some of the gains and at least get to the positive. Currently reading at 1041. Gold, really interesting chart right now. And I'm not sure what happened as far as the last 20 minutes on these bars, but GLD gapped down and moved mostly sideways. And now it has spiked up and is now trading up on the upside. So readings right now, GLD 121.66. The volatility index is rising today. And we can see it's at 1024, still a low number in terms of what we normally see on the VIX, anything right around that 10 to 11 area. And we could see declines are leading advances. And I'm going to go back to our member page. I wanted to show you our headlines right now. Technology sector has just had a cross above the 80 for the BPI. I did go ahead and pull that chart up for you to see, because we can see obviously technology has been doing fairly well. We had definitely a stutter here back in the beginning of the summer, but we've been on this rise, and you can see that typically what you want to see is that BPI get over 80 into what is considered the hot zone for the BPI. That's why we track it when it goes above or below 80. So we've been seeing the readings below 80 quite a bit here since the beginning of August, really. And now we're starting to see a move upward. We'll have to see if it's a fake out like we got earlier. But interesting reading there right now, and I wanted to show you that. And that's all I have for the first market update. I'm going to leave it at that.
Okay. Well, we definitely are going to have an interesting week. There's no doubt about it. I mean, we're extremely overbought. I thought maybe what I would do is just quickly show a couple of charts. First being the S&P 500. And the thing that really stands out to me, very first thing, is when you look at the momentum oscillators, you got the RSI right now on the S&P 500 at 77, almost 78, with stochastic near 95. And the Dow Jones, which literally just does not seem to take a break, it's been going higher just about every day. I mean, look at these candlesticks. Almost every one of them is a hollow candle, meaning that we're closing above the open. And the volume's definitely been picking up. It's been a really interesting run. We did have options expiring on Friday, so you do tend to see the volume spike on those days. But when you look here on the Dow, look at the RSI, 88 on the daily RSI, and stochastic at 98. And it's not just that we're there; it's that we've been there. I mean, we just really have had no selling whatsoever. And heading into the worst week of the year historically and being so overbought, I don't like the combination. Personally, when I run into something like this where I'm overbought and I feel like the market really needs a break, I just tend to pull back a number of my positions, either sell half or sell all, and just kind of move more into cash. And that's what I've done this time. Just waiting to see what happens this week. There's a lot of news coming out. We've got the Fed coming up. The 10-year Treasury yield, I'm watching this pretty closely. And you can see earlier we had moved higher. We were up near 239. We got to 238.8. And you can see the 240 to 242 area that we have not been able to negotiate for the past 6 months. That's a key area, because if we do get through that, it's showing that there's a lot more selling taking place in the bond market. That's why rates go up. The selling in bonds creates higher yields. And so that would, in essence, to me, suggest that more and more money is ready to rotate over into equities. But the fact that we're at this level and haven't gotten through, would be an area where the yield might pull back, meaning that money rotates into bonds. And that could be something that maybe we'll get a little bit of profit taking this week. I mean, I'm hopeful that that's what happens, simply because the market needs it. We've been so overbought for so long now. We really could use a period of consolidation and base for a little bit before the market makes another move up. The problem with remaining overbought like this and just continuing to move higher in the major indices is that when you finally do see the selling, a lot of times it will steamroll and pick up speed on the way back down. So you can sit there and have gains for 2 months and see them wiped out in one week. Unfortunately, that's the way the market works sometimes. So I just think it's worthwhile to be a little bit cautious this week, just to see how things unfold as more and more companies report their earnings. Speaking of earnings, there were a couple of companies that came out and they went different directions with their earnings. Hasbro reported, and I think they beat on their bottom line, but they offered up some warnings on their revenue going forward. Market didn't want to hear it, and you can see another shoe just dropped. We had one that dropped back in July on very heavy volume. Now we just saw another one. And I wanted to point out, too, that when you look at the toys industry, which is DJUSTY, and we look at the seasonality, this is where I think some of this comes in handy. If you notice over the last 20 years, 18 years, November is averaged going up 0.2%, December minus 0.2%, and January minus 0.5%. You might think that this is a group that picks up as you get into the holidays, but it's actually the exact opposite. Toys up 47% of the time in November and December, and 53% in January. But look what happens when you get past January and you head into late winter and early spring. That's where toys tend to do their best. So the DJUSTY, look at how often these different months went higher. 78%, 83%, 78% of the time over these 4 months. 3 of the 4 months, very strong. And even April, maybe almost 50% with a slight gain. So this February to May period is when the toys tend to do really well. So I'm not shocked to see Hasbro come out with their disappointment and their lowered guidance in terms of revenue. And then on the other side of the spectrum, LII, which is Lennox International, huge move today with its earnings. The stock is up 7%, almost $13, taking out this prior high. And the thing is with this one on a weekly chart, pretty nice cup, not quite all the way back up, but it kind of gives you that cup feeling. Look at the volume picking up into the right side of the cup, which is exactly what you want. And then after putting in this little handle for a couple of weeks, we're getting the breakout today. This actually, to me, looks like a measurement up to about 220. Bottom of the cup around 160 to the top around 190. And then we're getting the breakout. So I could see the stock making a move up toward that 220 level. A couple of stocks in the news in terms of upgrades. Illumina, ILMN, and NVIDIA, NVDA. I know NVIDIA had their price target raised at one of the securities firms. I'm not sure which one, I don't recall, but I think they raised their target up to 230. So NVIDIA having well, actually, I think NVIDIA was up a little bit. Let's pull that chart up real quick. And you can see, yeah, it's up 65 cents, but the stock's made such a big move already. I think maybe the market's just kind of looking past another analyst upgrade because we've seen many of them in the recent past. Illumina, though, ILMN, was up challenging a recent high. The stock's up another 273 today after having a really strong Friday. The volume has picked up. This, to me, again, looks like the right side of the cup. Probably going to run into some resistance right at about the current level, maybe up to about the 214 area. And I wouldn't be surprised to see a little pullback, but I think that's an opportunity. ILMN has been one of the better performing biotech stocks. Among the downgrades was Biogen, BIIB, and also in the biotech space. This one's coming down, but I think testing a really key support level around 330. You've got price support and the rising 20-day moving average there. And I know last week there were a lot of questions about the IBB or about biotechs in general. I'm still very bullish the group as a whole, but there was a negative divergence. You can see the higher prices, lower MACD, and we're just getting a 50-day test, and we're down near price support. So I would not be surprised to see the IBB begin to pick things up here. I think on a weekly chart, it might be down around 320, where we have pretty good support. There's that rising 20-week moving average. It's at 321 and change. That's what I'd be keeping an eye on. So, yeah, it's been frustrating in October for the biotechs because the market's been going up, but this is nothing more than rotation, in my opinion. And so biotechs have just been sitting on the sidelines waiting for their turn. I wouldn't be surprised to see that coming up pretty soon. I did mention the historical tendencies. All 5 days this week have huge negative annualized returns on the NASDAQ since 1971. So October 23rd to the 27th tends to be very bearish. Doesn't mean it goes down every year. I'm not trying to tell anybody there's going to be a crash, but just keep in mind that the seasonal outlook is not very bright this week as we look into this week in October. There have been some pretty significant moves lower during this week, but everything looks so good technically. I would just be looking for maybe a little profit taking, if anything. And with that, let's get into the Monday setups. I know last week, Erin, we had a couple of stocks. I know I had put out there Guess, which is GES. I'm going to pull up a 10-minute chart. This stock actually did really well. It's having a really good day today. But let's get a 6th day on this chart so we can see where we were. So it was about the middle of the October 16th, last Monday. So it would have been somewhere around here. Actually, I think I have that number. 1574 is where Guess was last week. And you can see now it's up 1697. So it's up about $1.23, which is probably about 8%. So that's a darn good week for Guess. And on the week or on the daily chart, it had pulled back to a support level for those of you who weren't in here last Monday. And that's the reason I liked it. We were at the 50-day moving average. We had higher prices, lower MACD, negative divergence. So what I look for is a 50-day test and MACD centerline reset. We didn't quite get to the MACD centerline, but we did come down just above the 50-day, and then we have turned back higher here. Nice volume on Friday, not bad volume today. So this one's done pretty well. And I think you had Archer,
yes,
Midland, ADM. Yeah, and this one this week kind of took a pause at the beginning of last week, but actually we were talking about this before the show, and put a nice hammer in on the 20-day moving average, and is moving back up now since then. And it's moved back above the price where it was last Monday. I think it was 43.56, so we are back above that. But I think short term, I don't know what you think, but maybe that false breakout at about 44 and a quarter, 44.20. I think that maybe held it back a little bit last week, but it does seem to be resuming some strength last couple of days.
Yeah. I mean, I think I picked it because it had executed that neckline of a short-term double bottom. So it looked like it had executed and we were going to get a move, the length of that pattern. Mm-hmm. Kind of did, if you call that, the top of that candle of the wick, we kind of did what it was expected, but it immediately went back down. And so I think it was traveling mostly down for the week, but made it all up. So I'm pretty much unchanged, I think, on the week. So, but I would say you won.
Yeah, well, this week was a good one. Yeah, GES did really well this week, but every week's a new week. So, and now we got to come up with our new ones. Last week's gone and forgotten.
Yes.
And so this week I will go ahead, because I'm going to just let you take it after me, and then you can go right on into your PMO and decision point discussion. But I'm going to start with my pick for this week. I've actually been waiting a while for this stock, and I think it's at a key area. So I'm going to go with Extreme Networks, EXTR. Here's a stock. When you look at the daily chart, really good volume. You see the huge volume came in August on the move up. We did put a shooting star candle. That's a reversing candle right here on the top. Notice the gap up, that long tail, similar to what Erin was just pointing out on the ADM. It came back down, and that is a shooting star, a potential reversing candle. And a reversing candlestick along with a negative divergence, to me, is not a good sign, not a good combination if you're long. So I would use those as possible sell points if I owned a stock like that. But here I had been waiting and waiting. EXTR off that negative divergence has come back down, tested the 50-day. I think $11 is really an interesting area of support. Now, we are still above that a little bit, but from a reward to risk standpoint, I think that still it looks good from a longer perspective. Sitting at $11.59 right now, so that'll be the price that we use for next week to see how it does. But I think it's got a shot to head back up to the $12.50, $12.75 area, maybe even $13. It's really the overall market this week and being so overbought in the market that has me a little concerned. I definitely would not be chasing stocks as we enter this week. So I think this is the one I'm going to go ahead and use. And if I get out of here, I can show you there were three others that I liked, but I really like them more on a pullback than I do on just flat out buying here. So in other words, if the market is weak this week, perhaps Weight Watchers, if it can lose a little ground here, no pun intended, but if it can lose a little weight on its chart, I really like it down closer to $40, $41 if we could get back down close to that September low. In the meantime, I think it's consolidating off a very, very strong accumulation on this move to the upside. So I do expect we're going to break out, but I'd be looking for any weakness to take advantage here. And then I had two others. First Solar, which actually is starting to make a pretty good move today, but I like this sideways consolidation, and the closer it can get toward the bottom of this range, maybe 44.5 to 45, the more I like it. With the recent highs being the initial target up perhaps around 51.50 or so. So I think First Solar looks pretty good consolidating. And then my last one was Scientific Games. I know Mr. Hopkins, when he's joined us from Earnings Beats, we talked about this one a long time ago, how it came out with the really strong earnings back in July. They're coming up with earnings soon, so I think you got to be careful there. But I do like this pullback all the way back down close to this area of support between 39 and 41. If they come out with earnings and go down and test this area and the earnings are good and they move lower to test this area, I'd be looking for possible entry there. So those are mine, and I'll let you take over.
All right, let's see what we got here. I ran my scan, and I did it just on the S&P 500. So I'm going to show you. I only got 3 today, which was great because I was preparing for my PMO workshop, which we're going to do next. I'm going to show you. I actually am picking Aetna as the one I'm going to go with, but here are the other 2 first, and that would be Ethan Allen. That came up. I like the fact, again, you've got that reversal. That's what the scan is looking for, is a reversal where you've got a bottom on the PMO and it's been rising at least 2 to 3 days. I like the fact that we can see the OBV going with this particular rally, and the scooter is also moving up. And I think when you look at this, a move to 33 seems completely reasonable. So pretty decent reward risk on that one. The other one was LMAT, and you can see here we got a breakout off of what I would say is a short-term double bottom. I think we might have already executed and be done and need to head back down, but the PMO does look pretty good. And of course, you're looking at a stock with some great relative strength, long-term potential here. You've got a scooter up above 75, which is always good to see. So I didn't pick this one, but there's some possibility here because it might bounce off that neckline and continue higher. But
Erin, would that bother you, the fact that the volume isn't very heavy? I mean, like today, 60,000 shares.
Yeah, especially after the fact we had such nice high volume. So it does That's a good, you pointed that out, because yeah, that's something that we should consider as well. So fact it poked out there, you can see it didn't even close near the intraday high. Yeah, so I'm passing. The one that I'm going to pick is Aetna. And I think the insurance space is doing decent at this point. But I love it. Double bottom. That's pretty much, textbook what you're looking for. And the neckline is right on overhead resistance. So if in order to execute this double bottom, it would require a breakout above resistance. Well, you get that breakout above overhead resistance, and I suspect these are close to all-time highs, if not all-time highs. So I would be looking for, a move higher if we get that breakout. So I'm going to take the chance, even though we haven't had that breakout. Measurement of that pattern is like a 9% length. So that's the length you should expect on the upside. We can see the PMO has actually already executed that buy signal. Kind of wish I'd picked this up before we had the signal, but that's all right. I think it's lined up fairly well. So I'm going to take my chances here on Aetna because I like the pattern and I like the potential on it.
All right, 162.28.
Yep, there we go. All right.
They're in the books for next week.
Yes. All right, so let's get started on this PMO workshop. We got started a little late, but we can sacrifice a little of the 10 and 10, I think. So.
Yep, you've got the floor.
All right, excellent. Let's get started. All right, so yes, I'm Erin Swenlin, and I'm going to talk to you today about the DecisionPoint Price Momentum Oscillator. And we get lots of questions about it. It is a momentum, obviously, as the name says, and a momentum oscillator similar to the MACD. So I constantly get questions, why do you use the PMO instead of the MACD? Well, I'm going to discuss that. And then I'm going to also tell you how you can scan using the PMO so that you can get some trading opportunities like I show you on the Monday setups. And I'm also going to show you some market indicators that we've developed using the PMO. And I think I've shown some of those indicator charts here on Market Watchers Live, but I'm going to show you how to get to them and how you can use them. So let's get started. A lot of people, first of all, is what the heck is DecisionPoint? Because everything Carl Swenlin, Erin Swenlin, is usually prefaced by DecisionPoint. Well, DecisionPoint was its own company for a while, a long time. It was created by Carl Swenlin in the 90s. It actually started as an AOL message board, is how DecisionPoint started. But we started to morph. Carl started to do his own spreadsheets and started he started to match up with stock charts so we could get some great chart creation on our website. We started the DP blog, but we're mainly known for our analysis process. And I'm only going to really discuss a portion of our analysis process because the PMO and momentum are only one piece to the puzzle as far as DecisionPoint analysis goes. And you can bet I'll be doing some more workshops on the rest of the DecisionPoint model as far as our process and as far as what all indicators are out there that we have. But we do timing models. We're really the only ones on stock charts that do timing per se with actual signals, which is why you usually see my blogs with those different signals in the title, because we get the sells and buys on the PMO, but we also follow a trend model, which again, I'll talk about it another time. But you put those two together, and that's how you can get the information you need. But you also need to know what's going on in the market in general. And so we develop market indicators. And like I said, I'll be showing you the market indicators we developed using the PMO. And then, of course, you can go to our DecisionPoint blog. Carl writes a Friday weekly wrap-up, and I will put 3 to 4 articles, depending on whether there's something to say that's interesting. And I'll post those there as well. So you can learn more about the DecisionPoint process. I have links to all of our different indicators at the bottom of every blog that I write, including when I write for Chart Watchers. So you can go there, and you're going to be able to go back and look at that kind of information. So as I said, it is a process. We like to keep it simple. The first thing we like to do is look at our market indicators to give us an idea of what the market bias is. I think everybody knows for the past, I don't know how long, The market bias is bullish, so this doesn't take a whole lot of effort here in the longer term. But in the shorter term, you do want to identify that because you need to know what your trading timeframes are. So you may need to know market bias in smaller timeframes, shorter. We do identify trends. We look at whether things are rising, falling, and neutral. I mean, I think that's pretty obvious, and most people do. But then we look at the conditions, whether the market or a stock is overbought or oversold, and the PMO can help with that. And then once you get all that information, act accordingly. try to keep your emotions out of it. We also do special studies. You've seen my sentiment reviews. I do those on Fridays on Market Watchers. And you can look at relative strength using the PMO, et cetera. So there's plenty out there to look at. But I'm going to concentrate on the identifying conditions, overbought and oversold. So we'll look at that. Before I get started, though, on that, I want it, because the PMO does give us buy and sell signals, I want to give you a little bit of some ground rules when using our timing signals or using any timing signal. And the number one thing is to look at the chart. So I ran my scan this morning, and I had choices, and I needed to look at those charts. I can't just buy into, I got that PMO buy signal or I got that sell signal and just act on that. You really have to look at the chart. And I've shown you plenty of Monday setups or ones that have come up in scans, and you looked at the chart and it just wasn't that great. So timing signals should be considered attention flags, not necessarily action flags. Because you have to, of course, have some critical thinking. You get that when you look at the chart, and then you use the timing signals, and then you're more than likely to have success. You want to know that when we do the PMO, and you look at the PMO on a weekly or monthly chart, or any of our signals, they need to go final. So I don't consider it a signal for a weekly signal until Friday. That's the last trading day. So whatever happens then, wherever that indicator is, that's what the signal is. And monthly, same deal. We wait till the last trading day of the month, and that's when we get our signals. So I know a lot of people will tell me on the DecisionPoint scoreboards, hey, that weekly PMO signal, I don't understand. It's been on a buy for the last 3 days. Well, yes, but it may not be on a buy on Friday. So that's why we use the final numbers. And finally, with timing signals, don't settle just because you get a buy signal. If the chart just doesn't look that great, wait. And let's face it, there are tons of investment opportunities out there. So don't force it. So let's identify the condition. And that's, like I said, what we use the price momentum oscillator for. So what is it? It is a rate of change ratio. It's really nice. You can use it for historical comparisons. If you put a daily PMO reading on a weekly or a monthly chart, a long-term one, you're going to be able to see the highs and lows, overbought and oversold conditions. Can't do that with the MACD. You can also use PMO values as use those for relative strength comparisons. So if the S&P has a PMO reading of 2, and the NASDAQ has a PMO rating of 1, then relatively speaking, you can actually compare those values. You can't do that with the MACD. It's similar to the MACD in behavior, which is why everyone always asks me the question, why do you use the PMO over the MACD? Because they look very much the same. They act very much the same, but they are different. So they're the same because you do look for divergences. You look for center line or the zero line in the PMO's case for, whether it's rising, falling, and it measures momentum. But it's different to the MACD in its construction, which is why I think it makes it more powerful. The MACD is simply a difference between two price EMAs. So you just measure that difference, and that gives you your reading, and then you can compare that to signal lines. But the MACD, because it's just a difference between two EMAs, is unbounded. So you can't make comparisons, relative strength comparisons, because you don't get readings like you do on the PMO, where you get actual values that could be compared across the board. And because it's unbounded, you can't use the MACD at all for overbought and oversold analysis. There is no range necessarily, so that if it's at a certain height or a certain, if it's at a low, you can't measure it as overbought or oversold. It just doesn't work that way because it's simply a difference between two EMAs with a W. And so you can't get that relative strength analysis, like I was saying, because you do not get values. And then the historical values on a chart are not really visible or helpful. And here's what I mean. So if you put daily values of the PMO on a weekly chart, you can see the range. You can see when it was oversold, when it was overbought, when it's gone above or below the zero line. But look at the MACD. You're going to get similar, and you can see the values look very, very, noticeable here. But as you get further and further away, the MACD becomes useless. So that's the other reason we like the PMO versus the MACD. What is it? You can go to Chart School and you will get this calculation. And just in a general sense, let me explain it. So you derive the PMO by taking a 1 period rate of change, and then you smooth it with 2 custom smoothing functions. The idea, it's very similar to calculating a regular EMA, only we use these custom smoothing functions to create the PMO line. So we take, for example, the 20 period custom smoothing using this function, and we take that of yesterday's price divided by today's price divided by yesterday's. So you're getting times 100 minus 100. So you're taking this value, smoothing it, and then on top of that, smoothing the value that you got right here. So you get 2 smoothing, custom smoothings, and that's how you get the PMO. And the signal line, of course, is just a 10 period EMA of that PMO line. So if you really want to go in, set this up on a spreadsheet, etc., this is how you can do it, using the original smoothing multiplier and then a custom smoothing function. So it is a little confusing for some, but you can go look at that further. So how do you use the PMO? Negative crossover signals. We look for momentum reversals. We look for those overbought, oversold ranges. And I like to use it as a confirmation indicator, not necessarily as my leading indicator. So I might look more at the trend model, look where the EMAs are, and then look at the PMO as a confirmation of a breakout or the execution of a chart pattern. So here we go, PMO timing signals and reversals. So yes, as you and many will point out, the PMO does tend to lag as far as its timing signals. It's not bad. It still does very well if you wait for those signals, but I've annotated here, if you go in at those reversals, the bottom reversals and the tops reversals, before you even get those signals, that's typically what I look for when I'm looking for trading opportunities, investment opportunities. But if you want to be just a little bit more conservative, you can wait for those signals, but a lot of times you're going to miss part of the move. So I look for the reversals more so than the crossovers. Those crossover buy signals are great confirmation tools. And then here is what I'm talking about with the PMO range. So you're going to see stocks and indexes and anything that you use the PMO on. You'll notice it is an oscillator, as the name implies. So it has a range. It has to oscillate. So it tends to oscillate within a certain area. So here's an example of PMO ranges. This is from gold back in September, the chart. And so we have a PMO reading right here. And comparing it over here to this top, this doesn't look very overbought. But here's why we want to pull the range. We want to find the actual range. So if you pull it out to a longer term chart, that's how you can determine what the actual PMO range is for a stock, ETF, whatever it is you're trading. So while that didn't appear overbought on that previous chart, when you look at it in a longer term chart, that actually is overbought for the PMO. So that's what's great about this indicator. Like I said, you can get those overbought oversold readings. And yes, you do tend to get some outliers. I mean, like with everything. So you can be prepared for that. This looks overbought, but we certainly know that it had been able to move higher than that. So we could be not quite as concerned, so to speak, even though it was the top of its normal range. But we were in the middle of a nice strong rally. So you have to take that into account. So PMO analysis using market indicators. So here's how I use the PMO as a market indicator to tell us what's going on overall. And it gives us all 3 time frames. So let me show you what I'm talking about. I'm going to take you right over to my demo here. So I have in my chart lists, if you download, see how it says DPMI, and then it gives you a number. If you go into the My Account page, you can click on that, and that's where you can download the DecisionPoint chart packs. This is in the DecisionPoint Market Indicator chart pack. And I'm looking at the PMO analysis charts. So this is just my chart lists. This isn't anything special, but I happen to have a chart list that is PMO analysis charts. And what's in it? We look at the S&P, and we see where all of the members are as far as their PMOs. And we have it also for the OEX, the Dow, and of course the NASDAQ. And then we have this very interesting one called the All Index Price Momentum Oscillator Analysis. And the All Index takes a look at the members of the Dow, the S&P 100. It just takes a huge amount of including the small caps. I can give you the list if you're ever interested. But here's how we use these. So this is an all index. So this is kind of a temperature of the market as a whole. And you can see the all index if you put it all together. This is actually the NYSE composite. So that's why I use that. Priceless because we're including so much in this all index. So what you can see, there's 3 time frames. And right here, short, intermediate, and longer term. So by measuring the amount of components in an index and see where they are, if they have what's the percentage of them that have a PMO that's rising. So that means the PMO line is on its way up. So what are the percentage of components in, I'm actually going to go from the all index. I want to go here. Let's look at the NASDAQ. All right, that's an ugly chart because I have all those on here. Let's go back here. Okay, actually very good. Okay, so the percent of PMO rising in the S&P 500 right now is 63%. So 63% of the S&P 500 components have PMOs that are rising. So in the short term, that's what you want to see. You want to have a stock that the PMO is rising. Remember, I look for those bottoms, those reversals. So I'm looking for stocks to invest in that have a PMO that is rising. So 63%, that's okay, but we can get higher, obviously, and we've seen much higher. The intermediate term, what we do is we measure those buy signals. So how many are on buy signals in the S&P 500? Well, currently 57% are on PMO buy signals. Notice also these are Friday numbers. The DecisionPoint market indicators need all of the information after the close to update. So that's why you're going to see these dates that are back to Friday, because we don't calculate these real time. So the percentage of PMO crossover buys, 57%. Longer term, we're looking at whether the PMO is above the 0 line, because that gives it a bull market bias. So we want to see the internal strength by having a PMO that is above that 0 line. So that's what that measures. And 78% have a PMO above the 0 line. So if we were going to analyze this chart to find out what's going on in the market, in the short term, I see that PMO is rising, and I think that's positive. It's not overbought. We can get higher. We can get up to an 80%. So I think there's still room to grow. You look at this and you're thinking, oh, but the buy signals are starting to pull back. Yeah, but when you look in the thumbnail, it's really mostly flat. So I would say that's more of a neutral, because we still have quite a bit we have the majority still on buy signals. So I wouldn't worry about this as being, I would consider this not bullish or bearish. So more in the neutral section. And then as far as the long term is concerned, we have almost 80% with a PMO above 0, and that implies a lot of internal strength within those components in the S&P 500. We're not quite overbought. We've seen higher. So at this point, I think we're looking bullish in the short term. I think we're bullish in the long term as well. Until I start seeing something turn down, that's when I'll start to worry. In this case, I'm looking at Lowe's oversold readings on all of these indicators. And we get oversold readings, and they typically come before a rally. So you can see there's a rally off of that one, a rally off of that, rally off of that. And if you look at tops, I don't have that annotated, but you're going to get a similar situation. The tops are considered overbought. So that's when you're looking for tops in the market. All right, so let's go back. As I said, we have these for the 5, those PMO analysis charts. And you will find those in the DP Market Indicators chart pack, which is free to extra members and above. You can't download it if you're a basic member simply because you only get one chart list. And clearly, this one already contains 5. So that's why you need to be an extra member to download these. And they're pre-done, they're ready-made. There's no excuse. If you like these charts, go download them. You don't even have to create them. They're ready-made for you. All right, so let's get back to our presentation here. All right, so now the next component that I want to talk to you about as far as the PMO is PMO scanning and how you use it to find investment opportunities. Because guess what? I think 100% of us here on stock charts are looking for investment opportunities. So here's how you can use the PMO to do it. So you can scan using the PMO. You can scan for crossovers. My favorite scans for reversals. You could set it up where you get PMO at a certain percentage or a certain length above its signal line. So you can look for setups that way. So once I do the scanning, if I have a large group to look at, I will review it using Candle Glance. I'll show you an example later. I will use Candle Glance, or I'll use the chart books if it's only a few. Like today, when I did my Monday setups, I had 3. So really no point in using Candle Glance. I will just flip through those 3 charts and determine which looks the best. So again, extra members, one of the great things too is once you do those scans, of course, you can create a chart list from the scans. But also on the reverse side, if you have chart lists and you want to do a scan to see how well you're getting, how those results, if you want to add them to a watch list, for example, or you have that watch list and you want to see if any of them are setting up for a crossover or reversal, you can run the PMO scan on your own watch lists and find out which ones, as far as the PMO is concerned, are the best candidates. And then at that point, start clearing out the dead wood. Like I said, I have to look at the charts, every single one of them, either in Candle Glance or in the chart book, and determine whether what the scan gave me is actually good. Because you can get PMO reversals and they're reversing in the wrong place, or they're whipsawing. You got to look if the chart pattern's bad, if something, as Tom does, is getting close to earnings, maybe you want to just pull that out. So that's the powerfulness. That's how powerful these PMO scans are. And so this is my favorite one. And actually, I've tweaked it a little bit. So if you're watching the rerun, I would suggest going to the DecisionPoint blog and looking up my PMO scanning blogs, and I've got them reprinted. You can copy paste them. And like I said, I've manipulated them a little bit more to make them, I think, a bit more, it looks for the right things. I've lost that word. So anyway, here's what my scan does in a general sense. I'm looking for a bull market bias, okay? That means the 20-day EMA needs to be above the 50, which needs to be above the 200. So I want something in a nice rising long-term price trend, because There's no point in trying to invest in a stock that is going the wrong direction with price trend, or that I have to cross my fingers and hope will go into the right direction of the price trend. Let me go with the ocean waves. Let me go with the river. I'm not going to try and swim up. So that's what I'm looking for. That's what I scan for. And then I scan for a PMO reversal. And that's mainly, I look for the first day, I wanted the PMO to be falling. The second and third days, I want to see it rising. So it tests for that. It doesn't, I'm not going to get the ones that have been in a rise of more than 3 or 4 days, the PMO. So I want those reversals. I'm not looking for a current momentum, moving. I want to see that momentum shift. So here is the scan in basic, in the actual language, the scanning language. So the universe we're scanning for is the S&P 500. I need a PMO that has not had a crossover. So I'm taking today's PMO reading, and it needs to be less than today's PMO signal line. Okay, so I don't want it to have had a crossover. PMO rising for the last 3 days. So today's line greater than yesterday's, and as you can see, blah, blah, blah. So the next one is looking at a positive lineup of those EMAs. And as I said, we've got a 20 that is greater than the 50 is greater than the 200. So that's what I'm looking for. That's how you can get a good scan and some great candidates, I think, to determine. And so here I'm going to go to that live demo. I'm going to show you how to run one of those scans, and you can see how you can use it. So when I go through my scans, I don't have a whole lot, because once I find a couple of good ones, I'll use those. And then we also have predefined alerts and predefined scans. And I think those are excellent as well. So you can just go in and look at some predefined scans. However, I had to develop my PMO scans. Those aren't predefined. So again, DecisionPoint blog, or go up to the top of your member homepage, and there's your magnifying glass. Just go in there and type PMO scan. And when you do that, you should be able to find those articles. There's actually an article for bear markets as well that scans for what I call dogs. So you're looking for you want to look for those reversals, topping PMOs in a bear market, because you want to go with the trend. And if the long-term trend is looking like a bear market, then why are you looking for buying opportunities? You want to look for shorting opportunities. So here's the scan. We're going to go through very quickly here and finish up. So the scan I gave you is this scan using the S&P 500, but I'm going to actually do one, because I know there are only a handful. Let's do one on the pretty much the entire universe and see if we get a bigger result. Well, not much bigger. Sometimes you're going to get a result of 50, 60. You're going to want to look at it in candle glance. I prefer to replace an existing list. And at the bottom, I have one called Scan Dump. So I just use that. If I decide I want to keep stuff from that, I can always move it into another chart list. But when I first run a scan, I just go ahead and do save it into the Scan Dump. Let's see if I can get it to go. All right, let's try one more time. There we go. Candle glance. So I have a lot to look at. So I use a DecisionPoint candle glance. If you want your candle glance to look like mine, or look to what you like to look at rather than the default, if you save your chart style as candle glance, you not have to name it candle glance, then it will use that chart style for your candle glance. So I have a DecisionPoint one set up. I have a daily annual chart with the PMO, and that's all I'm looking at, as well as the 20, 50, and 200. So now I start looking for where are those PMOs going. So I would immediately get rid of this one. Flat PMO, you can barely tell where the crossovers are. Not very helpful. Just delete that out of there. We have one at this point. It looks like it's having that reversal, but we can see it's teased us a few times, kissing that PMO line. I would probably get rid of this. Plus, it's in the top of a trading range right now, so not a great candidate. But this is basically how I would do it. This one, well, that's interesting, right? Possible double bottom there, neckline. So from a standpoint of a candle glance, okay, well, let's go look at this and see if there are, if this is a good trading opportunity. Because remember, always look at the chart. You're going to get these scanning, the scanning information. And if you do one on buy signals or timing signals, again, look at the chart. I don't think I'm preaching anything that nobody here at Stock Charts knows. You're at Stock Charts, so you want to look at charts. So here's that potential double bottom and a neckline at 34. You can see that PMO is getting ready for that crossover. I do like the fact that it's starting to bottom above the 0 line. It has gone below it, but it's getting ready to come back up. This is what worries me when I look in the thumbnail. It came up and then again, fake out. So I'd be a little bit worried about a fake out here. Although look at that scooter, it's in the hot zone. Again, I follow the OBV and you can see it's doing okay. When you look at the bottom here, which would line up about up here. And if you look at the bottom over here, as far as we're actually seeing declining bottoms, rising bottoms on the OBV, that would be considered a positive divergence. So that's how you use it with your PMO scans. And you can then go through and look at which ones make the most sense as a possible investment opportunity. But as I remind you, wait for the best setups. Don't force it. There's no point in forcing it. You can do this on your own and wait. So let's conclude. The PMO is a twice smooth momentum calculation. It looks like the MACD, but it behaves similarly to the MACD, but it's so much more powerful, in my opinion, than the MACD for the overbought, oversold analysis among the historical tendencies, the relative strength comparisons. And then you can also use your PMO analysis to look at market conditions in all 3 timeframes using those PMO analysis charts. You can use the scans to find investment opportunities. Candle glance is invaluable if you get a return of 40-something, 60-something investment opportunities off a PMO scan. You use that candle glance. And here's what you're looking for: overbought, oversold PMOs. You're looking for bull and bear market rules applying. So what are we in now? Well, I think it's pretty clear as of this taping that we are in the middle of a very strong bull market. So those rules apply, meaning don't do your scan for a short in a strong bull market that you've already set yourself up with not the best odds. Look for rising trends on those candle glance charts. Look for divergences with the PMO. And then look for chart patterns. So that's what you've got your candle glance up there. Here are the quick ones you're looking for. And these you can write down and save on your step-by-step. So that's pretty much what I had for you for our PMO workshop. I hope you enjoyed it. I hope you use the PMO more if you aren't already. And again, I think it's more powerful than the MACD. And I think it's great that it does behave like the MACD because people are familiar with the MACD. But again, not everybody is familiar with the fact that you have ranges and overbought, oversold readings that can be compared across indexes and stocks, etc. So, and with that, I know we are very close to, well, we're very close. We've pretty much passed up the 10 and 10, but I am definitely going to pass that over to you. I'm going to do a quick market update and pass over to the 10 and 10. We'll just do that before the DecisionPoint report. And you can throw in some earnings in there too, I would say.
One question that came in, and I'm actually getting back, so I'm just going to say this real quick. Is there or what are the difference between the PMO and the PPO?
And the PPO. Okay.
Yeah.
Well, there are differences in the smoothing calculations, but very similar, again, in behavior. I just prefer the way the PMO reacts versus the PPO. You could go into chart school and see the calculations. They're not really the same. So you can tell that. But yeah, the PPO also acts with its behavior is very similar. But yeah, I would go into your chart school and look them up and compare the calculations, and that will give you honestly the best answer to that question.
Okay.
All right. Okay. Well, with that, let's see. I'm going to go ahead and move over to a market update. Let's go ahead and we'll just look at the market summary. I think that'll give us all the information we really need for this update. And I'm going to sort it by the percent change, and that's very helpful as well. So TSX actually doing better than the US markets right now, but only by a little bit. Dow, S&P are doing very well. One of the things I noticed when I looked at the market summary is we're seeing small caps not doing well. We had a really great run up on small caps, and now we're starting to see them pull back. I've been getting some negative signals on those. Little bit of a concern for me there. You really want the small caps participating when we're looking at market rallies to new highs. Healthcare ETF is leading today. The laggard is the industrial ETF XLI. As far as industries go, hardware and disk drives, semis, all leading. The tech area leading. And we can see oil services, natural gas, commodity there. Those are in the red, not doing quite as well. International ETFs, Japan, India are leading, and France is on the positive. Everybody else, all the other ETFs are on the negative side, with the worst being Brazil, followed closely by Spain and China. And as far as the bonds, like I said, treasury yields are lower at this point. And we can see as far as commodities, corn ETF, natural gas ETF, UNG are on the plus side leading, and palladium and sugar are on the laggards. And that's all I'm going to give you for a market update. I think that covers it. And now we can go get into the 10 and 10 to 1, 10 and 10 after 1 today. And the first one, of course, is taco, because I gave that out at the beginning of the program. I want to see if what everybody's thinking matches what you're thinking.
Very well. I want to check. Yeah, I've still got a whole. You want to do the 10?
Oh my gosh, you're gonna make me talk all program, but yeah, I guess so. Maybe we can say goodbye, say hello, and you'll come back and have the voice, but we'll see. All right, well, I will start then with taco, and let's get to it. All right. Yeah, Tom is just a recorded voice today. It's just me live. Okay, well, wow. I'm not liking the look of this on that falling hatchet is what I would call that. But we did hit some interesting support here, and we did bounce off of it. A lot of heavy selling on that drop. But look at the PMO. It was already giving us a sell signal back here earlier in October, and it has continued lower. And of course, now it has accelerated lower with Friday's just disastrous move, as well as OBV, of course, falling. I don't like to catch falling knives, especially falling hatchets, like I would call this one. Certainly we're at some interesting support. I'm going to just go look very quickly at let's see, where is my weekly chart? There it is. Yeah, so we are on some really interesting support here, but we're getting a PMO sell signal now on the weekly chart. Again, look at that volume, negative volume, of course. I would be very nervous, very nervous to be trying to get in here. Of course, it is that possible play that you could get, where you're going to get that huge move up, but I prefer not to take those kinds of risks. All right. I had one already written down also for number 2, so I'm going to just do that one, Tom.
Okay.
All right. Ooh, that sounded good. You might be okay. Go ahead and start talking.
I heard a echo.
Ah, gosh darn it. Okay. I love you guys. I don't mind talking. So Fitbit was one that was brought up, and a really interesting chart. I am on that sell signal, and momentum is certainly trading lower, but we are on some interesting support here. I didn't actually annotate taco and save it, so I guess I better do that. let's see here. Oh, Del Taco. I didn't even notice that. I don't know if you guys have Del Taco out in your areas, but Del Taco is the best. Even in California, we all love it, and it's fast food, Mexican food, but it's so good. Okay, so we're looking at that area support. See, I'm looking here at Taco. I think you could even fall lower. I don't like this at all. So let me go ahead and save this. And let's see. Today's what, the 20? Isn't this okay? I think it's the 23rd. There we go. Everybody's sending me the information. All right. This way I can just copy paste to make it easier. All right. Fit. And here we go. Let's go ahead and annotate. Yeah, I love when you guys give us these stock symbols, honestly, because I know you're giving them to us more than likely because they're on a watch list or you're looking at them to trade. So I think it's always interesting to get these from everybody because, you know, it gives us some looks at some possible trades. All right. I know, Tom, you would probably agree with me that this, looking in the thumbnail right now, you know, we've fallen right down through the 20-day. We've now also fallen through the 50-day. I would want to see that bounce coming very soon because momentum is still looking bad. And I'd want to see that recaptured, that 50-day EMA, or at least a move that would get us back above this area of support, get it back moving upward with a bounce, because I think there's still an opportunity here for it to fall lower based on the fact the PMO is continuing to decline. And look at all that selling. Ooh, ugly. All right, Tom, I'll let you give me the next ones.
Next is
Qualcomm, QCOM, right? Did I guess?
Yes.
I'm getting better at this now that I do this show. Okay, annotate. And here we go. All right. Oh, that's interesting. I can see you know, in a longer term sense, reverse head and shoulders here, which is quite interesting. And now we're getting ready to test a neckline here. So it looks like we've already had a successful test and executed the pattern, honestly. Actually, I need to use a trend line here because they're never perfect. There we go. So I would be looking at it as a neckline for a head and shoulders here, and we've got a breakout, and it looks like hang on here. Let me get this right where I want it. Okay, and we're going to take it up this way. Left shoulder, head, left shoulder, and now we're getting that break there. Okay. So we're heading up to that 200-day EMA. I see the 20 is crossed above the 50, and that gives me an intermediate term trend model buy signal. Look at that, really interesting. I would call that a bull kiss. Tried to fake everybody out and get them out of the stock, and now we've got that kiss on momentum, and we're starting to head back up. We're not really overbought. We can get up to 2. I'd like to see it get past the 200-day EMA because it's not had a whole lot of success this summer and into fall. So I would be looking for that, honestly. Okay, save that. Next one will be
AAL.
Okay. American Airlines. I think you looked at this earlier this week. Okay. Well, the PMO is telling me we're at a reversal point on momentum, so we could end up sticking around with a PMO sell signal, and I would say that is near-term overbought. So that's a concern. Looking at these PMO tops, they're in decline. In decline also with the tops here on price, so that would be a bearish confirmation. Don't like that. If we could hold that 20-day, I think there's some possibility here. Let's go ahead and I'm just going to draw. Where do I want to go with this one? Okay, so we're in there's our declining tops line. So we've been in a decline here, a declining trend. Don't like it, but you could actually make a case for, we got that sort of spike down here, but I think you could make a case for a descending wedge, which would give you a breakout. But I'd want to see that PMO switch direction with a breakout of this wedge. And even so, over resistance is sitting here at 54. I don't particularly like that. So there we are. And look at the OBV scooters now falling out of the hot zone. So I wouldn't look at this as a great candidate. If I were holding, I might even consider dropping it if it doesn't hold that 20-day EMA. All right. Next.
SBAC.
SBAC. There we go. Okay. Let's get this. I see a PMO sell signal right off of the bat. I can tell you guys aren't using my scans when you pick these out. Because they're immediately coming up and I'm like, I don't like that. Look at the PMO sell signal. We got kind of that fake out, with that reversal. And let's get here with some trend lines. I'm not quite as OCD about colors as you are, Tom. I'll just use whatever color it throws at me. Okay. Yeah, scooter's okay. All right. There's the rising bottoms trend line, and it is holding that. We're getting ready to, we tested that 20 and this trend line, and we're moving upward. I think that's a good sign. But where is our overhead resistance here? You could even say back here because of these two tops. So with a stock price like this, I don't see a whole lot of risk reward as far as getting in here. And I wouldn't get in personally just because of the way the PMO just went on a sell signal. So as far as my analysis is concerned, I would not be looking at this. So like I said, if you guys throw these at me and I'm getting PMO sell signals, well, I can guarantee I'm not going to be really excited about it because my analysis process is different than Tom's and I look at different things. What's the next one? How are we doing?
MGM.
All right. Okay. Well, see, now this would be a candidate. I've got a PMO that has bottomed and it's now been rising for a day, it looks like, at least a day or two. We don't have the buy signal yet. So immediately I would be looking at a possible opportunity here. In the very short term, as far as the OBV, and we're talking really short term, we've got rising bottoms right here off of this bottom. And of course, they're rising. So I would say that's a bullish confirmation at this point. I don't like that it's traveling lower. But the scooter is looking pretty good right now. I'm telling you about it and I'm not annotating it. All right. This is harder than it looks, Tom. I just want you to know. Okay. All right. Let's get some support resistance. Really nice bounce, right? Off of this support. And I know the tragedy in Las Vegas was part of the reason we saw the decline in a lot of these stocks, but it actually made them unwind, took them out of what could be overbought. It basically made them oversold. So I think they look really good. I like this PMO buy signal coming into play. You can see a breakout happening right now. I draw this across and I'll skinny it up. You can see a breakout coming on the previous highs we had here after that move down. It looks like a little bit of a gap. So I like that little breakout. I like that PMO buy signal. So this one's looking pretty good. 20 is still below the 50. So that's why it didn't come up on my scan, but it looks decent.
All right. CALA.
CALA. All right. Brand new PMO sell signal. So yuck. Don't like that right off the bat. Here we go. My professional technical analyst language, yuck. All right. we got that breakout. It looked pretty good, didn't it? We were holding that support level. I would have been looking at this to go on up to that 20, and we could see a nice move on that PMO. But you know what? The PMO topped on this first decline right here, and that was giving us a warning. And then, of course, we had the follow on, which yanked it further. And it's now today putting in that PMO sell signal. So I think this range is important. I mean, I would look for it to move lower before I'd look for it to move higher at this point. But this one is pretty decent, I think, to keep on a watch list. And you've still got the hot zone going for it here too. So, but that's a bit of a concern right there. So I would be watching and see what happens at the support level and see how the PMO reacts. Does it end up getting below zero, or does it stay above zero? So that would be what I'd be looking for there.
All right, three more.
Okay. Perfect. Are you still echoing?
I am.
Okay, what's the next one?
TLRD.
TLRD?
Yes.
Okay, perfect. Okay. Well, got a PMO that's starting to rise, so I like that. Look at the scooters rising. OBV, we're getting some volume on here with this rally, so that's looking pretty good. Let's get into my annotate area here. So that looks good. We can do some trend lines real quick here. That's looking good. That's looking good. Now let's look at some support and resistance. So that gives us a look at just our conditions there. We're getting ready for some overhead resistance, but I think I would even drag this up towards that gap. So I think that's probably even better. Look for resistance, but this is held as near-term resistance. So we do need to get above that. The PMO is suggesting we will. I like the fact that the PMO bottoms and the PMO tops are rising with price. So I think it's setting up nicely for a breakout, I would say. So this one doesn't look too bad. I like that 5 just crossed over the 20. Yeah, some good stuff here, but I would be a little bit concerned too. You need to pay attention to where the 50-day EMA is in relation to the 200. If it's below, that typically means you're in a bear market configuration. You've got a bear market bias. So you're supposed to expect bearish outcomes before you expect bullish ones. So the expectation really should be a hit of this overhead resistance and a turn back down. But we can see the 50's been improving and it's really gotten close to the 200. So I wouldn't be quite as concerned about that. All right, 2 more. And then I'll do my DecisionPoint report.
TSLA.
Okay.
Tesla.
Yes. These are interesting cars. I've seen them. I haven't driven one, but they're very interesting. All right. Possible head and shoulders, a little bit messy. Let's get here and start annotating before we start talking. All right, support resistance. I'm just going to throw that in here right now. It's a nice trading range if it can continue through it, but we've seen it not be able to get above it. You know, we've had twice now where we couldn't reach the top of that range, which is not that great. You can see also that we have a PMO that is in decline, and it gave us a fake out PMO buy signal. So that's a whipsaw. You could call it a bear kiss. In any case, it's not positive. But the PMO is still above zero, and near term, we are considered oversold. But as far as the PMO on here, normally the normal range, I think, is right around 4 to -4. It could still fall a great deal lower. And notice the scooter, you know, it was above in the hot zone for so long. It was really enjoying that space in the top 10 for so long on our Market Watchers market updates. And now, you know, it crossed below and it's sticking there. So not good. All righty. And one more, I believe, right? Last one.
Lennar.
Okay. Len?
L-E-N, yes.
See? I'll never be as good as you, Tom, at those but I'm getting better. All right. There's some support resistance. There's a nice breakout. I guess you could say it's a tiny little gap, but I'm not going to talk gaps here. We're not overbought. I mean, I think if we take this out, I'll take it out on a longer range, but we've hit this area of 4. So the PMO is not overbought, and we're at a breakout at all-time highs. So I like that. Look at we're getting back into that hot zone. And again, that PMO is looking pretty nice with that rise. And look we've got the same happening with the LBV, and you can even see the bottoms rising here. We're going to put in a higher top there as well. So I think those all look good. That support, based on this, I would say support's going to hold and it's going to move higher. All right, here we go. And that completes our 10 and 10 to 1 at 120. All right, Tom's got his echo, so we're just going to move on back to, I'm going to show you our, do a quick decision point report. We're down to about 10 more minutes, and my voice will probably only last a little bit more. Okay, so I'm going to take us over to my Safari. And I want to look at my, actually, it's better to get to it from here. Okay, our decision point live chart list. So I'm just going to go over our indicators right now. I did have a request. Somebody was asking me about IWM, so I'm going to look at that. And remember, we have been having some problems with the small caps, but as I noted and as I wrote, we could be looking at a really pretty longer term flag here, or intermediate term flag. And that would be a really nice move up. And given the strong bear market we're in, if this turns out to be our little pullback or small correction, we can see the PMO is set up for that. So I would be looking for, we're probably going to see a little bit more decline here, but we're staying within this declining trend channel or flag. So I think there's still some good possibility here. But as I was saying, I don't like seeing relatively small caps getting worse and not keeping up as far as the new all-time highs after new all-time highs on the S&P and the NASDAQ. Here we go. Dow, NASDAQ, 5. All of these guys are setting new all-time highs. And what's happening to small caps? They're in a declining trend. But they did accelerate higher faster. So I think this pullback is a good thing. And like I said, we could be setting up for a possible bull flag. But I would like to see that PMO look a little better. Okay. So let's go to our ultra short-term indicators. And I have added on here, I saw Carl do it, and I decided I liked it, is putting the new highs, new lows as a climactic indicator, our ultra short-term indicators. So first of all, the VIX, we're in this Bollinger Band that has gotten so thin. Normally I use this as an overbought, oversold climactic indicator. I don't use it as a long-term one, which is why I invert the scale, because the higher the reading, I consider it oversold. And you're supposed to look for a move higher when I get that pop below the Bollinger Band on this inverted scale. But we're to a point now where the margin is so thin that we could very easily penetrate it one way or the other from one day to the next. What I do notice and wanted to point out is that notice that we end up with the VIX, and again, this is inverted. We see it underneath the average in the middle of that Bollinger Band, and that would suggest weakness during that time period or some concern. And it didn't really pan out that way. So we were getting these higher readings. They did turn out to be more of an oversold reading, having it below the average. So while I think you can use this in a bit of a longer term thing. I like to look at these as a day by day indicator. And right now we're not getting that penetration of those Bollinger Bands. So I don't think it's giving us the kind of information we want. But look at what happened Friday with the advanced decline ratio, or advances minus declines. You had a spike. We got climactic readings, and look at the S&P new highs. So typically when you get these climactic readings, you have to analyze them and determine, are these exhaustion readings or are these initiation impulse readings? Are we just getting ready to start something new? The fact that we have some nervousness here on the VIX and we got these spikes, my sense was that we will get that this is more of an initiation and not an exhaustion. And that's what we're seeing right now with this move to new all-time highs. And one of the reasons I was looking to the positive for this week. And our short-term indicators also gave me that information. And notice what they did last week. We had gotten a bottom in near-term oversold territory, and they are heading up. And that's why I'm looking for higher prices this week. Seasonality or not, that's just as far as my technical indicators, I'm looking for higher prices. And I would say even going into next week, if you look at these short-term indicators and seeing that they're bottoming and now rising. What's going on in the intermediate term, though, as far as our indicators? Well, they had given me a little bit of some heartburn here because we did get negative crossovers on both of them. But it appears that we might be ticking back up and making a move toward even more overbought territory, moving to those extremes if we get this to turn around. Honestly, we really do need to see these unwind somewhat. But looking at those short-term indicators, I don't think it's going to happen just yet. I think we're going to see these turn around as we are. I think we're going to get those positive crossovers. I think we're going to get a PMO to move higher into overbought. These indicators moving higher into overbought territory. And then I would start looking for that decline. But right now, short term and intermediate term, the intermediate term is starting to look up. All right, big four. And then I think we can wrap it up, Tom, and hopefully you don't have quite a terrible echo. We will see.
I think we can probably wrap it up after that, although I'm not hearing anything.
Yeah, keep talking, keep talking.
All right, I think I'm good.
Oh, yay. Of course, just in time to end the show. Yeah. Not a problem. I did have a big glass of water over here, so that was helpful. So I wanted to look real quickly at the big four, dollar, oil, gold, and bonds with a DecisionPoint perspective. UUP, I'm getting very bullish on the dollar. Look at this head and shoulders that has set up almost textbook fashion on UUP. And we're getting that break above right now. So I think this is looking good for the dollar. I would look for a move, the height of this pattern, which would put us close to that 2520 area right here at that area of resistance at the June top. So I think the dollar's looking really good. And notice we're getting a new intermediate term trend model buy signal on it today. So I will be likely writing a quick article about the dollar later today. Look at the buy. We got that bull kiss, the little bit of a fake out, that pullback, but we stayed above the signal line and are moving back up. Very nice. We are in a bear market bias, but with this chart pattern and that new signal, I'm looking for higher prices. And gold generally travels opposite the dollar. And I think it's looking pretty ugly. It's pretty much on the opposite side of things. We had this area of what I'd hoped would hold as support. It did not. Came back up and acted as resistance, and now we're seeing it come back down. We ended up with a gap closing. The gap closed on Thursday. And I would suspect we're going to test this area of support. But looking at that PMO with that top below the signal line, I think it's wishful thinking, honestly, to think we're going to stop at this, at the low for the month. I think we're going to be headed much lower. And I honestly, I know I've been talking about it since we started this decline. I'm looking for a test all the way back down to that 1200 area. I don't know if it'll end up being that ugly, but I mean, that PMO is so ugly. I really don't like that. And I wrote about gold in Chart Watchers, and I talked about the premium and discount. It gives us a really good measure of sentiment. We're running out of time, so I'm going to tell you to go to my Chart Watchers article this week, and it'll explain a little bit about how I use the premium and discount on CEF and the Sprott Gold Trust to determine the sentiment that's going on for gold. So one of the things we've been talking about is the sentiment is just not bearish enough in order to look for a reversal. I mean, look at the difference in the discounts we've had previously to what we're seeing right now in October. It's just not bearish enough. We need to see those discounts get even deeper. All right, USO on oil. And, I think it's looking good. We got that PMO buy signal, but it's just been, looking at the price of oil, I mean, it's been that $50 to $52 range. We've gotten close here with that 53. I just don't see it moving much higher. However, I know there's talk about, oil stores in the US, and there could be somewhat of a shortage because of hurricane. So we could see higher prices just based on that. But I still think that $54 level is going to be the top at this point. And look at the PMO. We got the buy signal, but it looks like a fake out. I think we're going to break below this area of support and start moving a bit lower before we start moving higher. Final bonds, 1032 my time. Declining trend channel, we broke out, looked great. And I could annotate this, but if you drag down this declining tops trend line, it held as support. But the 20 following, turning down below the 50, it's kind of an intermediate term, not looking that great right now. And I've been looking for a test of 122 for quite a while, and I still stand by that, especially when you look at a PMO that just got a sell signal below the zero line. So that's, a double whammy because you're getting that sell signal on the PMO, but when you see it come in under the zero line as well, a top below the zero line and a sell signal below the zero line, that's especially bearish. All right, and that will conclude my Decision Point report. And I'm going to let you talk, Tom, and say goodbye mostly. I will certainly answer your questions.
Well, first, you did a great job. I mean, that, it's always hard to take, have to talk for an hour straight, which is basically what you just did, maybe a little over, but certainly appreciate it. Yeah, I don't know what's going on. Technology is just technology. It's great on the one hand, and other times it can be a problem. We have continued to look into, I know there were a lot of suggestions in the chat room, and I certainly appreciate those suggestions. We've looked at a lot of the basic, what we thought might be basic root causes of it, and everything tests out pretty well. So there are some potential issues with internet connections, and so we continue to look in that direction, but there's only so much we can do with that. So we just keep working at it and trying to improve it and hopefully eventually eliminate any of the issues that we're having, but we'll keep working on it. As far as, the PMO discussion, I thought that was great, Erin.
Yeah.
I'm
glad to explain the differences so people can see, how it's powerful and why I do use it over the MACD.
Well, and I think too, it's just good to go back and give some basic information on some of the indicators that we use, because I know I do, and I'm sure you do as well, take for granted sometimes, when we're talking, we assume that everyone understands what we're saying. And if you're new to the program and you're new to some of these indicators, I think going back and doing the segment like you did today is really helpful. So I thought that was awesome.
Thank you. If anybody has questions that maybe I know I didn't get a chance to answer, you're welcome to send me an email. You can send email to Market Watchers at stockcharts.com.
Yes, awesome. All right, well, it is a little bit past, and so we're going to go ahead and wrap up. We did get through the setup, so we got our setups for this week, and I did add those setups. I didn't mention it earlier, but the setups that I provided, if you go into my blog at Trading Places, on the upper left-hand part of the page, you'll see a link to the chart list, and I keep those for the last few weeks. So you could go back and look at some of the setups. I mean, some of them may be resetting up or maybe they've executed, but mostly what I'm looking for this week is, the market's just so overbought. I try not to, I try to be real careful about extending myself too much in a market that's so overbought. I mean, you don't want to miss the rally because sometimes these overbought conditions can remain overbought for a long period, and they have. I mean, you look at the action so far in October, and we've been straight up. But I guess the one thing I would say is just try to have the patience to wait, because the market does rotate. Even though we're going higher, we do see areas of the market that do take a break and go lower. It would just be nice if the overall market would allow some more consolidation and some basing. I think that would give the market much more bullish footing as we go into the last couple months of the year and into 2018. It's just difficult when you're so overbought to commit new capital. So I don't know. We got another Fed meeting coming up next week, and the 10-year Treasury yield, that's one of the things I'm watching into the close today. The 10-year Treasury yield yesterday got up to 239, or not yesterday, Friday, got up to 239. That would really be news if it did it yesterday. But we did get up to 239. We pulled back, and earlier today we were back down to 236s, kind of testing the top of gap support from Friday morning. And now we're starting to rise. I've been looking for about the last 90 minutes, and we've been rising again on this yield. So I'll be watching pretty closely to see what happens if we get back up near that 240 area. Again, I think if we break out, it's probably the bond market signaling that they collectively believe that the Fed's going to raise rates again next week. But we got a lot to think about. We got another jobs report coming out in November, which I think is going to be really strong. And so we'll see how the bond market and the equity market reacts heading into that report. What are your final thoughts for today?
So goodness, I would have to say, as far as the S&P, I'm bullish in all three time frames. I mean, I think those indicators were pretty clear, and fortunately for me, I can just fall back on, hey, the indicators say, but they do. I am bullish still. I know seasonally, maybe I think we can go a little bit higher before we need a pullback, but those small caps do have me a little bit concerned, seeing that weakness there. I just wanted to say, I'm sure you probably will too, but Martin Pring,
yes,
the tech titan of technical analysis, will be here Wednesday.
Yeah, that's going to be a great show. We've had a couple of really awesome guests on here the last couple of weeks with Arthur Hill, and then Julius coming on last week discussing the RRG charts, which everyone really appreciated and got so much positive feedback really from both of those guests. And now we have Martin Pring coming up on deck and ready to join us on Wednesday. That should be an absolutely awesome show. Again, if you have not listened to Martin in the past, you're in for a treat. He has a unique way of looking at the market, and as Erin said, I would certainly put him in Titan category up there with John Murphy and a few others. But he is he's got a unique way of looking at it, and I think everyone who listens to the show is going to get something out of it on Wednesday. So definitely mark your calendar for Wednesday and Martin.
Indeed.
And with that, I think we are ready to sign off. I certainly appreciate everybody coming in for the show today. Thanks for your patience on the little technical glitch that I had. But Erin handled it absolutely perfectly with the PMO discussion and taking over for the 10 and 10. So certainly appreciate that. So thanks again for joining us. We'll be back on Wednesday. If you can, when you leave, there is a survey form. I know Erin would love to hear what you thought of her PMO presentation. So just go ahead and fill that out as you leave. Let us know what you thought of the show today. We do enjoy getting that feedback, and we do use those comments and responses to help shape future shows. As a reminder, Market Watchers Live airs on Mondays, Wednesdays, and Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Monday, everyone. See you on Wednesday. Happy trading.